Hello traders, you're welcome to this video. In this video, we are going to be looking at trend lines. We are going to be considering how to draw trend lines effectively and how to use them to identify breakouts. Basically, we are going to be looking at a trend line breakout strategy. Okay, so drawing trend lines effectively and recognizing breakout signals are crucial for any trader. They are very important. Also, understanding the psychology behind price action can further enhance your trading strategy. So we're just going to be looking at a detailed guide on how to use the trend line breakout strategy. So first of all, how do you draw trend lines effectively? You need to identify swing highs and lows when you want to draw trend lines. Okay, so we can see that we have a higher highs around here. So these are lows, higher lows, sorry. We have higher lows around here, so we just need 2 points, two initial points to draw our trend line. Okay, now if it is for a support trend line, you look for two reversal points, connect them together, and you have your trend line. If it is for a resistance trend line, then you look for two reversal points as well above, join them together, and then you have a trend line. Okay, when you have higher highs and higher lows, it indicates a bullish trend. On the other hand, when you have lower highs and lower lows, it indicates a bearish trend. You have lower highs and lower lows, it indicates a bearish trend. Okay, let's just look for another example. All right, you can see we had a bearish trend around here, right? Okay, now if possible, when you draw your trend lines, it should touch as many prices as possible. Sometimes these wicks can pierce through the trend line. The trend line must not always be at the tip of the wicks. In some cases, they may not be at the tip of the wicks. Okay, all right, like you see here, okay. But make sure that it does not cut into the body. Okay, the body of the candles. All right. Now, the more times the price touches a trend line, for example, here, multiple touches without breaking it, the stronger the trend line is considered. As you can see here, you can see that these trend lines were quite strong. We have this channel last all the way from here to here for more than 2 weeks, if I'm not mistaken. You can see from the 4th to the 21st for more than 2 weeks. Now, how do you recognize breakout signals? Basically, it's for a bullish breakout. A breakout occurs when the price moves above the resistance line. It suggests upward momentum. And remember that when a breakout happens, there are chances of a retest before continuation. So when you want to trade a breakout, after the breakout happens, wait for a retest, like what happened here. Then you can enter your buy after a bullish candle forms. Stop loss can be below the breakout, just below it. Then take profits can be at the nearest resistance zone. Then as for a bearish breakout, let's look at what happened here. Although this one was more of a triangle, but Well, let's just focus on this trend line because we are dealing with trend line breakouts. Okay, so when we had a breakout from this um, trend line, when we had a breakout from that trend line, I want to go to a smaller time frame so that we can um, look at when a possible retest happened. Let's just now it's important to look at smaller time frames, for precise entry because there would have likely been a retest or at least get price getting close to this trend line after this breakout. Then you enter your sell, set your stop loss above the breakout level. Take profits could have been at the next support zone. As you can see, there was rejection around here. Okay, the next support zone would have been a good zone for the exit. Okay, now it's also important to understand the psychology behind price action. In terms of market sentiment, price action reflects the collective sentiment of traders in the market. Understanding this sentiment can help you gauge potential future price movements. Okay, now in terms of bullish sentiment, when prices are rising, traders are generally more optimistic, leading to increased buying pressure. Now, in terms of bearish sentiment, falling prices create fear among traders, leading to selling pressure. Okay, then in terms of psychological levels, round numbers, often act as, for example, maybe 2300, 2400, 2500, and all of that. They often act as psychological barriers where traders place buy or sell orders. Beware of, so it's good that you are aware of how price behaves around these levels of round figures. Okay, now in terms of trading behavior patterns, fear of missing out, called FOMO, usually lead traders to enter positions late in a trend, which can result in losses. So when a trend has already gone far, just forget about it. Don't try to jump into the trend when it has already gone far. Okay, because the trend might end up reversing and you end up losing. And then loss aversion is a situation whereby traders hold losing positions for too long, hoping to recover losses. Please try to avoid that. If you were wrong, accept that you were wrong and do not allow your capital to get blown because you are waiting for and hoping for price to reverse your direction. That's the importance of stop loss. So that when price goes against you, it hits your stop loss and you lose only a fraction of your capital, perhaps between 1 to 3% if you are risking that amount per trade. Okay, so stop losses are very important. So try to avoid loss aversion. Recognizing this behavior can help you avoid similar mistakes. By effectively drawing trend lines, recognizing breakout signals, and understanding market psychology, you can enhance your trading strategy significantly. So it's important that you always practice your skills on demo accounts before implementing them in live trading in order to gain confidence and refine your approach. It's very important. I hope you found this video insightful. Kindly like and subscribe for more trading insights. Cheers and happy trading.